Hello and welcome at Stocks Advisor channel. Today we will talk about Clovis Oncology Incorporated, traded at Nasdaq, ticker name CLVS. Well, Clovis Oncology did today some, let's say, very interesting candle. It's a doji one, but with a very high upward shadow. And overall, we finished with minus 0.38% by 528. After hours, some slight positive volatility is seen, but still the question is, what's next for Clovis? Is it going high, low, or actually how can we read this chart? And how we can actually trade here? Well, to understand this, let's quickly first have a look on what is going on in general, and then we will talk about the levels, two technicals and one risk mitigation due to a negative catalyst, as we always do at our channel. So first, to understand what's happening, we can see that if you look at the bigger scale, we are actually in a very long, big volatility range, let's say, which is seen here. And overall, let's say the confidence level where we trade safely and which we pass many times. So our volatility level is defined by the channel between actually almost 9, you can say, and at the lower part it's 497. So what does it mean? It means that within this price, if you're lower to those levels, you can buy easily and then you can sell when you are higher. So for the last 1.5 years, this is what is happening. And now if you look where we are of today, we see we're at the lower part of it, and multiple times it worked as a support line, indeed, the level of almost 5, actually 497. And today candle is a bit tricky because it bounced back from moving average 50, the blue line, but what might be happening, it could be immediately returning up, because again, if you look more careful here, it might be kind of flag forming, because if you look at the line here, it could be that we are indeed forming here kind of a flag, and once the volatility finishes here, it could be resolving upwards or downwards. This we will see most probably upwards, but it means that some action will take place. This is one point, and also looking that RSI is declining and MACD is actually, histogram is about to make a secondary wave, most probably secondary negative wave. It would mean we might still go a little bit lower and then rebounds. Or if we go immediately finishing the negative wave for MACD and go in positive area, it would mean we will, let's say, bounce inside of this triangle and then actually resolve upward. So still we need to think, and this upward line, dark line, still works as a resist level, forming this triangle. So it means we should be careful and buying lower levels. So buying anything below 497 would be quite safe, and then selling in the vicinity of this dark line would be the easiest way to trade, and it should give up to 10 to 15% profit. So we can already put our profit note here, which will be 10 to 15% from overall money allocated in the position. And speaking of how to buy, of course, we still need to take into account possibility to immediately rise from the level of in the vicinity of 497. Therefore, our first entry will be anything. Also, you can see this very nice line at 528. So anything between 497 and 528. So this is so-called the first technical level. So the technical level which might work immediately and which we can actually use as entering first time. And how to enter, we will talk later at the end of this video, with which portions, etc. So this would be the very first level, and of course then you can sell 10 to 15%. If you are more, let's say, long-term trader, you could still wait until 7+, but for shorter term traders, anything 10 to 15% in the vicinity of the dark line would be the very easiest way to make profit. So next technical level, if this one is indeed cancelled and we decline this way, it would mean we are, instead of forming triangle, are about to form actually this descending channel. And this would mean that anything at the in the vicinity of the end of the bottom of this channel, which would make us, this line would be the very good level to buy. So therefore, we can say that our second technical call out, second technical level where we can buy again would be between 445 and 418. So let's write it down and then make a note here. So it's a call out. So this would be the lower part 418 and the higher part 445. You can still see that both levels are relatively close to each other, and then to understand what would be the risk mitigation, of course, we need to demagnify. And here you can see the only one we can take is this one. So risk mitigation level is actually the level which might take place if there is a negative catalyst related to the company in the form of bad news, or it could be sector or global economical level related actually thing. And this would be here between 312 and 356, which will allow us to make the third call out. So let's write it here. This would be 312 and 356. So this will be our third level. I just put it here, but you know it's lower. So these are 3 levels to buy. The first 2 are technical levels, and the third one is the risk mitigation level. Still, levels are quite close to each other, but we are in a very nice confidence interval. So speaking of how to buy through here, it will be the classical 5-portion play, meaning that actually the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first level. If the price goes to the second level, so second technical level, you can buy through that level with 2 portions. And if you decline further with negative catalyst to the level of 312, 356, there you can buy with remaining 2 portions. This way, it will be best optimization for profit versus loss. And as you can see, we do not talk about stop loss strategies here because we don't look at 15-minute candles. We don't want to buy and win time by money, but we would like to actually win money by time. And actually, it means that we are looking at daily candles and we buy through the levels, through the principal levels, and we mitigate risks with the principal levels as the third one. So this way we might wait a little bit longer, but once the bounce takes place, we're going to make profit there. That's why we do this averaging down non-linearly, so meaning that we buy with different portions at different levels, and we do not talk about stop loss. So the idea is you trade with the profit, or in the worst case scenario with the draw. So if you like this way of trading and this way of profit making, don't forget to subscribe to our channel. Also check other videos. Even those posted let's say earlier are still fresh, because situations discussed, especially the lower levels, might be just happening, and you will be right in time to buy and make your profit there as well. So with this being said, that's all for CLVS. Good luck with this one and other stocks. Don't forget to subscribe, and see you in other episodes of Stocks Advisors channel.